Can a seller pay closing costs? Can a seller pay for closing costs? Let's discuss that. Realtor's Toolbox, Loving Life with Lucy Curran.
Michelle Haas here.
I'm Realtor Rich, and we are super excited to be with you today so that we can talk about the seller paying the buyer's closing costs. Now, it's an interesting thing when we talk about sellers paying or making concessions. There's a few different terms that get thrown around kind of interchangeably, like a seller credit or a seller concession or a seller contribution. They're all really describing the same thing, and that is when the seller is going to contribute money to assist the borrower that's buying the property in covering their costs so they have less money out of pocket. So super important, and probably the number one thing to consider is working very closely with the loan officer, because the client's got to know what the final numbers are that they're going to need. And what they really are interested in is two numbers. How much money do I need to be able to buy a house? What do I have to bring to the table? And the other thing is they want to know what their payment is. But in figuring out and talking about a seller credit, there's a number of fees and things that come into play that you're going to want to know what these things are. So if you're brand new, I'm going to list these off really quickly for you. So the types of closing costs that can be paid by a seller would include credit report, appraisal, escrow fee, title insurance, homeowner's insurance, mortgage insurance, money to set up impounds or escrow accounts, which we'll talk about at another time, prorated property taxes, notary fees, processing fees, underwriting fees, tax service fee. You may be, the seller may be paying points to help buy down the interest rate a little bit for the buyer, prepaid interest on the loan for depending on when it closes in the month, and then the wire fee when they send the money to the escrow to fund the loan. So there's a lot of different fees in there. It adds up to a ton of money, and back to the buyer needing to know how much money they're bringing to the table. So if a seller is contributing 3% and the buyer is getting a down payment assistance loan, so they've got money from that, and then they're bringing maybe $4,000 or $5,000 of their own money to the table, those figures together cover all of the cash to close. So that brings me to a really important point here. Very often the buyer will say, well, what's my down payment going to be? And when they say down payment, sometimes they're referring to their total cash to close that they need to bring to the table. And it's important for us to make sure that they understand that if we just tell them what the down payment is, and they were talking about the down payment plus the closing costs, they may have a misunderstanding about the money that it takes to close their deal. So that's why it's going to be so important that the conversation happens between the realtor, the loan officer, and the client. We need to close the circle on the money. Where is all of the money coming from to make sure that the buyer has the money they need to close their purchase transaction? So when you write that up in a real estate purchase contract, typically you want to write this up so that it reads something like this: seller to contribute 3% of the purchase price to the buyer's reoccurring and non-reoccurring closing costs. So that kind of covers everything. Now, there are certain boxes and things that are going to be checked in your residential purchase agreement where maybe the seller is already paying for the full escrow fee and maybe all the title insurances. So those are separate from the money that they're giving to cover the closing costs that the buyer is required to pay for. So it's important to take all that into consideration when you're figuring out what is, the total cash to close and what is the money that the buyer needs to bring to the table to make sure they're doing the deal. And so with that, I think I want to turn it over to you, Michelle. You want to cover a little bit of different loans have different limitations on how much can a seller contribute.
Whether you're an agent representing the seller or you're an agent representing the buyer, there's a couple of things that you should know. If the buyer is coming to the table with an FHA type of loan, then you should know the limit on that concession is 6%. So 6% or less. If the buyer is coming to the table with a USDA loan, the limit on that is also 6% of the purchase price. And a VA has a limit of 4% of the purchase price. So you shouldn't ask for 10% when that number is not really going to work. So there's a limit to what a concession could be. If the type of loan is conventional and the down payment is less than 10%, then the concession could be up to 3%. If the down payment is 10 to 25%, then the concession could be up to 6%.
That's right.
And then if the down payment is more than 25%, then the concession could be up to 9%. Again, whether you're representing the buyer or representing the seller, it's definitely good to know where the limitations could be. So don't be surprised when the lender says, you can't do this.
Well, and another important thing to note here where we're talking about these limits, we're talking about the maximum concession you can get. And then even if you wanted to look at a conventional loan where someone was buying like a rental property or, an investment property, then in that case, if it were to come up, the maximum that the seller could give as a credit would be 2%. But the bigger thing to also consider here, when you're looking at like an FHA loan where someone maybe is purchasing their first property, and yes, you do need lots of help on the money, sometimes 6%, if the market is truly a seller's market, 6% might be a little bit too much to ask for, and make your offer less competitive in a situation where there could be multiple offers on the same property. What are your thoughts on that, Michelle? Because in some cases, we don't want to be asking for 6% from the seller because other people might be offering and not asking for anything, and it makes the offer less, desirable.
Well, when we talk about concessions, at this point, we most likely had an inspection. We most likely have a reason to ask for money back. It's usually not something that is brought up right from the offer. If I actually say, here, we're going to offer you $400,000 for the house, but give me 4% concessions, right off the bat, the average seller is going to think you're a pain. So this is not where you begin your offer. This is usually something that comes up when, we didn't know there's major damage on the house. Maybe, the roof had major damage. And then the buyer says, well, I need money back. And one way to get money back is through those concessions. Here, give me money towards my closing costs. And then that can kind of help me in my pocket, right? The other way is lower the purchase price of the home itself. The property has a problem with the roof. And instead of saying, here, give me money back on concessions, why not lower the purchase price altogether? And so it just depends on how you can use this.
Negotiation wise. Obviously, once the offer has been accepted, of course, just like you were saying, Michelle, definitely piggybacking on that is that you don't want to go in immediately. Depending though, I've written offers where I've gone in and representing the buyer saying, hey, we'll pay a little bit more for, over the purchase price to be able to help with closing costs, right? For then in asking the selling side to be able to credit them however much the buyer would like in going towards their non-recurring and recurring closing costs. So that is one way that I have helped out my buyers in the closing costs. And that's actually worked out really nice. I would say about 99% of the time when I write offers like that, they get accepted. And then another way is just like you guys, what Rich was saying earlier and what you were touching on earlier, which is as soon as we find out after the inspection period that there's all these damages and repairs, we don't want to flag the lender, right? Because so in order to make it work, the transaction go smoothly, just like Rich was saying, it's communicating with the agent, the buyer, and the lender, just letting them know what's going on. So hey, how much can we ask, being on the buying side, to the seller, saying, okay, well, we have proof of all of these damages and from professionals and estimates. So if you can't obviously repair them at this time, because let's say the seller doesn't have the cash in hand to be able to do these repairs, well, the other way is to be able to say, hey, the seller will agree that they will go ahead and drop down the purchase price, calculating however much they, want to in regards to the repairs, right? So that has worked out really well as well. In my transactions. So
let's just say the seller has $5,000 worth of damage on a property, and you can do it a couple of different ways. Asking for that money to go towards closing costs is less money the buyer has to put into those repairs today, or lowering the purchase price altogether is less money the buyer pays every single month from here on out. It just depends what helps that buyer, whether they need more. Do they need a lower monthly payment and they can get to those repairs later? Or do they need the money in their pocket so they can do those repairs right now? It just depends what helps them.
That's why we have a long list of Realtor Rich stated, because there's lots of creative ways to go about this, right? So the question was, can a seller pay for closing costs? Absolutely. If you like what you heard, please do subscribe below. Hello, Rich! And please do comment below if you guys have any questions or concerns. Thank you so much for having us, Realtor's Toolbox.
See you guys later. Have a great day. We'll see you on our next video. Bye for now.